Hi everyone, this is another show of Bitcoin Intelligence. We are going to review the 12th version of the BI report, and we have Wizard with us today. Hi Wizard, how are you?
I'm doing great.
All right, so let's get cut to the chase. In this piece published on Monday, 26, we talked about the oscillation between two Trumps. One is the capitalist, one is the protectionist, and we've seen these two emerge at different times. Initially, market after election, market was looking for the capitalist. They surged. Then the tariff man appeared and the markets crashed. Then he began easing tariffs, and people priced in growth. Then looks like a lot of tariffs will remain, although at a lower level. So markets were a little bit worried. They're still worried, and they're in an undecided place. So there is this on and off going on, and we believe that it's going to be the capitalist Trump that will win. And even though we will have back and forth where markets get worried at times and begin pricing in the protectionist man, and then we will see temporary corrections, but over time we should see capitalists come back and win big. And that's going to happen soon, as later this year. Basically, a couple powerful forces that are going for the capitalists are tax cuts and fiscal stimulus that comes from it. Tax cuts are making great progress, pretty much very likely that it will pass the Senate as well, and it's going to be signed by Trump. Senate will change it a little bit compared to the House version, which got passed, but they will only add more spending to it. It's very unlikely that they'll make a huge reduction. And the way the tax bill is written, it's going to add to the deficit massive amounts. So we're not getting a contraction. We're actually getting more spending. It's also important to take a step back and look at where we are in Bitcoin land. Here's a power law model, which this line is capturing the average expected price of the market, and we have exceeded it. I mean, this is a line we have been discussing since, I guess, last year. Yeah, so this line has been anchoring the price, and price went down below it, and it came back up, went way above it, and actually was showing a mini bubble formation after the exuberance because of Trump election, and then we crashed below it. Then we claim it back. Now we are above it. So we are a fair amount above it, but this is somewhat being above that line is expected because we are in a bull market. And if we actually go towards a cycle top, we will be separate. We will be above this line for some time, but eventually come back down. And here's our VPLI index that quantifies that gap. And basically right now it shows that the index is at 54 out of 100, meaning that we are actually not too different, not too far from the fair price that this model would predict. We would be much higher before this VPLI index flashes an orange or red line. We are kind of close to fair value. That's what you can get from this line.
Is it going to be the case that government is going to go break down on like all treasuries? That turned out to be no, that was no fear. At least for Bitcoin, it was very positive sentiments in the market after the SBR was signed out, even though they remained neutral and they just ripped off the label of the coin seized through multiple like Silk Road case, and they just named it SBR. But the positive signal that was sent to the market, and thanks to ETFs, you could see in every leg up above 74,000, like in December 2024, and the recent leg from 84, you could see the footprint of the institutions. For example, look at the ETFs. They are reaching to a new all-time high, and around 1.21 million coins is just managed or being like held at the wallets attributed to the US spot market, let alone the EU, Canada, and other countries, El Salvador. All of them have coin, Bhutan, all of them have Bitcoin. But the ETF, the US market itself, showed a very strong appetite to just acquire Bitcoin. Even the recent rally, you could see we reached to a new all-time high compared to late February 2025, which is really astonishing. And on top of that, if you look at the trade volume on the ETF, the brokers, the official stock market that trade the ETF tickers, this is the blue one. In the recent rally, both spot market on the centralized exchanges like Binance, Coinbase, and the trade volume on ETFs, they both reached to a very significant level, almost $8 billion per day, which is really significant. So a spot-driven rally was a very proper name for recent rally, specifically the footprint of the institutions, positive signal by the SBR and new administration was really felt in this market. And if you look at the cost basis of the ETFs, especially IBIT and ARK, you could see they are around, like, I think there's around 52 for ARK, 59, because ARK started to accumulate faster at the beginning. Fidelity and BlackRock are 59 and 72. If you look at the market and go back, this is very similar to what we saw in March 2024. If you look at the margin of profit, the size of profit for the ETF holders. So that being said, given the rally that we had recently from 74 all the way to 110 was driven by the ETF holders. I mean, not all of it, but they showed a really strong appetite to accumulate Bitcoin through the rally. That comes with a risk because now they are at a very significant profit, especially if you look at Tradify. They're not used to, I mean, they are really try to be logical. They're not going to wait for 10x or 6 months. As soon as they reach to a reasonable profit, they might start to take some profit. But the other thing that's happening in the market is the coin maturation. There could be 300 coins that had an age of 5 months, 29 days. And that 300 tomorrow is going to be long-term holders. Even though we spend like around 100 coins as a long-term holder, because 300 coins are joining or moving to the long-term holder basket, on a net basis, the long-term holder supply goes by 200. Tomorrow we're going to have 1,200. So you look at it and say, hey, long-term holder are going up. That means they're hodling. No, they're spending, but the new long-term holder are joining to the long-term holder cohort, and the net value you see is going up. But if you want to look at the long-term holders' behavior that used to be long-term holder yesterday, you have to just look at their spending volume. You have to see how much they spend. Yes, the net value of the supply might go up. A lot of the 5 month, 29 days kind of investors who bought at the top, they're hodling, and that caused the long-term go up. But the long-term holder who held plus 1 year, a very older sub cohort of the long-term holder, they are very important as well. If you look at their spending volume, this is their spending volume in USD. You could see the investors who held plus 1 year, they were like cashing out plus 1.4 million per day on average. And historically, it's a very significant amount of volume by these long-term holder. Yeah, we went to 2 billion for a very short amount of time, plus 182 million. But these are like very temporary.
In a phase where risks remain. And interestingly, we see the same thing in Bitcoin. So it's not, we're kind of in a neutral zone, and explosive price action is probably not coming in the next few weeks, probably takes some time. But over a longer period of time, towards the end of the year, I'm very positive, constructive on the market. I still can't believe that we are above 100,000. This still feels like a miracle.